Let's talk about a European stock that's flying under the radar. Edel SE Co, KGaA. The market isn't loving it right now, but here at Insightful Value, we dig deeper to see if that negativity is justified, or if it's a hidden opportunity in plain sight. As always, this review is for informational and educational purposes only and is not financial advice. Edel SE is a Germany-based media company operating in publishing, music production, and entertainment distribution. It's been around since 1986 and owns a wide portfolio of businesses, including record labels, book publishing imprints, and media distribution services. They also manufacture physical media, including CDs and vinyl, through their own plants. Yes, that's still a thing, and there's actually a niche but growing demand for vinyl in particular. From a value perspective, Edel SE has always been something of a specialist, serving targeted markets in Europe and leveraging strong relationships with content creators and retail partners. Despite digital streaming dominating the global music landscape, Edel has carved out a steady, profitable niche in physical and hybrid content formats. But with the stock trending downward recently, the question is, what's going on? Is the company losing its edge? Or is this a short-term pullback that savvy investors could benefit from? Looking at the fundamentals, Edel's margins have been surprisingly solid given the industry. They've maintained decent operating profits, especially in segments like vinyl manufacturing, which has seen a resurgence. Revenue growth has been modest but stable, and they've kept debt at manageable levels. One of the key things to note is that Edel isn't trying to compete with Spotify or Apple Music. They're focusing on a different space: physical media, licensing, and niche publishing. And that strategy has been paying off, albeit slowly. They've also invested in digital distribution infrastructure to stay relevant. Their recent financial reports show steady, if unspectacular, earnings with a solid balance sheet and positive cash flows. Edel pays a small dividend and seems to be focused more on reinvestment and maintaining financial health rather than rapid expansion. For long-term investors, that could actually be a good thing, especially in a volatile market. But the market seems to be skeptical. The stock has declined, likely due to macro headwinds and the fact that media companies not involved in aggressive tech-driven growth often get overlooked. This is exactly where value investors might find a hidden gem: low expectations, steady fundamentals, and a business that serves a specific, defensible niche. At Insightful Value, this is the kind of company we like to study. We provide in-depth, jargon-free analysis of companies like Edel SE, breaking down complex financials into clear insights you can actually use. Whether you're just getting into investing or you've been doing it for years, we aim to help you spot opportunities that others might miss. More info on Edel SE and many other undervalued companies is available at insightfulvalue.com. Make sure to check it out. And if you're into uncovering undervalued gems before they're back in the spotlight, subscribe to this channel and hit the bell icon. For more smart insights, head to our site at insightfulvalue.com. See you in the next video.